A very long time ago, in the 13th century, there lived an Italian mathematician called Leonardo of Pisa, and his nickname was Mr. Fibonacci because he invented the Fibonacci sequence of numbers that is generated by adding the two previous numbers in the sequence together. And quite remarkably, you see this Fibonacci sequence every day without even noticing it. You can see it in art, nature, music, and yes, even in trading. If you take some ratios from this Fibonacci sequence, you will notice that an asset's price will use these mathematical numbers from like 700 years ago as a reversal point in the market. It will respect these Fibonacci sequence points, which is very strange, but hey, it works, so we as traders make use of it. Let's look together on TradingView to see how we actually utilize this. And before you think that you need to calculate all these mathematical sequence of Fibonacci numbers all by yourself, don't worry, because TradingView provides you with a simple to use Fibonacci retracement tool, which you can find on the left toolbar right here. It will be the top option, the third top option right here. This is called the Fibonacci retracement. You can click right here, or you can use the shortcut, which is Alt F. And so why is this called the Fibonacci retracement? Well, the name explains it already. We use this tool to look for potential entries on the retracement before the trend continues again. But before you place this Fibonacci retracement on your chart, please select this magnet tool because it will allow this Fibonacci retracement to snap to these wicks, highs and lows. So in an uptrend, we go from the recent low, which is the swing low right here, and we go to the recent high. This will be our Fibonacci retracement tool, and yours might look different. That's because I don't use all the Fibonacci levels. I will double click to look for my settings, and then you can copy this. I only use personally, I only use the 0.236, the 0.5, the 0.618, the 0.65, and the 0.786. So you can write the number right here and then select it, give it a color what you like, and then you can follow along with me. And so what you need to know is that these levels of this Fibonacci retracement can be used as support in case of an uptrend and resistance in case of a downtrend. I'm going to show you right now how to do it in a downtrend. Very simple, just the opposite as in an uptrend. Now we go from the recent high to the recent low. So what we do is we select the tool, we make sure we have the magnet on, we go from the recent high to the recent low, in case we're just looking at this price action right here. And so these levels, you'll see that price will touch these lines before continuing the trend again. If we go to an example in an uptrend right here, we again select the tool, make sure we have the magnet on, and then we go from the low, which will be right here, to the high about here, and then you'll see that price touches this 0.5 Fibonacci level before going up again. So as you can see, you can use this tool as a level of support or resistance. And once you trade more and more, you will notice that some levels of this tool will get respected more than others. For example, you may notice, why did I mark this 0.618 and 0.65 level of Fibonacci in gold? Well, that's because this is called the golden pocket. This right here is the golden pocket. Let me make it gold as well, because this is known as the area in the retracement where price will likely reverse from. And in my opinion, this golden pocket is the best level of support or resistance you can use, whether we are in a uptrend like here or in a downtrend like right here. So you see that price touches this golden pocket right here, just a little bit below it here, beautifully touches it again before moving down. So that's why this golden pocket is a very strong level of support or resistance. And for the more experienced traders that are watching me, they'll probably tell me that this is just a retail strategy, everyone uses it, and yes, I completely agree, but that's why I say that you don't use this as the only confluence in your trades. If we are in a downtrend and you do the Fibonacci from here to there, and you just enter because price touches this golden pocket, it doesn't make sense. It's the stupidest thing you can do. Don't just enter based off a simple level of the Fibonacci retracement. You want to find confluences near these levels of this tool. For example, if I go to here and I draw my Fibonacci retracement, remember tool magnet from the recent low, because we are in a uptrend, to the recent high. Then what I want to do is not trade just because price hits this. I want to see in the market where is an interesting point to buy off. So I immediately see that this is a very important zone. This previous consolidation zone right here can be used, all these wicks can be used as a level of support. So that is why I want to see other confluences lining up here. I want to see EMAs, order blocks, fair value gaps, breaker blocks, whatever you use, all these confluences. And then you see that all these confluences that you just found, you analyze the chart and you found these confluences, but they are exactly also at this golden pocket, then you can know that this is an extra confirmation, right? This Fibonacci retracement tool is indicating that this can be a good zone to buy off. So I will say it one more time again. Don't just trade solely based off these levels of Fibonacci. Just use it as a confirmation. Find your point of interest in the market. I want to enter right here and I found Confluence right here. Okay, it's near this golden pocket, so that makes it an extra confirmation. So that is how I use this tool. Now let's put this golden pocket aside and talk about the other levels that we see here. For example, the 0.5 Fibonacci level can also be used and is personally my second best level of support or resistance. Why? Because this line separates the premium zone with the discount zone. Let me see right here. This right here is the premium zone, while this is the discount, and I'll explain you right now. So as you see, we are in an uptrend. We just made this massive candle to the upside. Nobody is now interested in buying, right? Because we are at the top of the move. So basic human psychology wants to buy low, sell high. So what they tend to do is wait for price to enter the discount zone, and the discount zone is below this 0.5 Fibonacci level. This right here is the premium, above the 0.5 if you draw the Fib extension from the recent low to the recent high in an uptrend, and below it in an uptrend we have the discount. Of course, this is the opposite in a downtrend, so we want to look for longs when price enters this discount zone, right? We don't want to look for longs right here because price didn't make a good retracement. So we as humans, and also the big banks and institutions, they want to buy lower, so they want to fill this fair value gap, to fill out the orders before moving price up again. We want to look for point of interest, confluences, etc. in the discount zone. This is our zone where we would like to enter. So that is why this 0.5 Fibonacci level can be a very strong level of support or resistance too, because once price crosses the 0.5, many people, many humans, institutions, big banks are interested in buying because they know that price might continue its trend again. So in my opinion, the best confirmation that you can use together with your confluences is the 0.618 and 0.65 level of support or resistance, which is the golden pocket. The second best confirmation would be the 0.5 because it divides the premium with the discount. And then you see that I also have the 0.236 and the 0.786. I don't use them as much as I do use these two levels, but I would recommend to only use this on the higher time frame, or only when there are a lot of confluences at these levels. But don't use this as a very strong one. Try to focus on the 0.5 and 0.618 and 0.65. So a quick recap on how I personally use the Fibonacci retracement tool in my trading is the first thing I actually do is look where the market is heading to. In this case, we are in a bullish environment. We are making higher highs together with higher lows. So I'm looking to long the market, right? The next thing I do after that is to mark out my point of interest. Point of interest are basically areas in the market where I would like to enter. In this case, in this bullish environment, we're looking to enter right here, or also maybe a little bit higher right here in this order block. Because if you look at the past, yes, right here you see that price use this level as a level of resistance. So we can draw this all the way to current price action and see that the order block is at the same level of the previous resistance that now can turn into support, right? If we break resistance, it can turn into support. It can. It's not always the case, of course. Remember that. So after we marked out our point of interest, we would like to enter around here. Of course, this is very fast. I normally take my time for this, but after I marked out my point of interest, I maybe draw some other confluences, and then when I use my Fibonacci retracement tool, where is it? Right here. Don't forget the magnet. I go from the low to the high, and then you see that in this I can already delete this point of interest, because in this point of interest is perfectly in confluence with the 0.618 and 0.65 Fib level. So we would maybe refine our point of interest to right here, right? We'd like to enter right here. Previous break of structure, golden pocket. If we put on our EMAs or MAs, we can see that you can also use it as a level of support. So that is also a good confirmation. A very big fair value gap right here. So everything looks good, right? And I know this is very messy and it's not a good setup, but I just want to explain you that how I do it is first I determine my bias. So I determine what are we looking for. Are we looking for longs or shorts? Is the market heading in a bullish environment or in a bearish? After that, I mark out my point of interest, so the areas in the market where I would like to enter. Then I search for confluences in that point of interest. A confluence can be the Fibonacci retracement, can be other ones, but when I found these confluences around the same area, that's what you want to look for. You want to find confluences in the same area with your point of interest, and that is where you're gonna enter. If you're longing, you want to enter just above these confluences. If you're shorting, you want to enter just below. For example, if we see that this golden pocket is right here, there is also an AMA approaching right here. There's also a fair value gap right here. I'm just saying something. Then I want to enter not below these, right? I don't want to enter below these. I want to enter just above these confluences, right? This is my entry, not in the middle of these confluences. I want to enter above it so that I don't get front run. That was it, guys. I hope you learned something. Don't forget to smash that like button, leave me a comment, and subscribe to my YouTube channel because it really means a lot to me. I hope you have an amazing rest of your day, and I'll see you in the next one.